Hello, good people. It's Greenberg from New Forex Academy. Today we are going to be showing you how I made a lot of bucks with this strategy. I'm always encouraging you to use. It's the money making strategy. No man has ever failed trading or this strategy. Anyone who's taking it seriously has made huge profits. A lot of people are sending me videos. Some are sending me pictures, people buying houses, people buying cars. A lot of people are living lavish lifestyles with this strategy. Okay, so today I'm going to break it down once again for you. We're going to be trading v25 1s, which is the synthetic index under Deriv broker, which is accessible even through the MetaTrader 5 platform. We all know it is the most popular after TradingView. Okay, so we are going to be trading v25 ones. If you don't have a synthetic index account or a Deriv account, click the link in the description and you get a free account there, and you'll be able to fund and trade without any charges. Okay, so first of all, we said for us to take any trade, we first have to understand which kind of trend are we in, and looking at this market structure. Okay, so let's break it down. We always say that before we take any trade, we have to notice what kind of trend we are in, so that we have a higher probability setup that will give us a huge return and a lower loss risk reward ratio. So looking at this market structure, we see that the market was in an uptrend. Why are we saying it's in an uptrend? It's because it was making a series of um, higher highs like this one, and a higher low, higher high, 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 until this time when it created a lower low instead of a higher low. And then when we noticed this, we said we will be looking for an opportunity to enter the market um, using our strategy, which is kind of associated with SMC. Okay, so what we are looking at here is we are looking at this market structure, trying to find an entry based on the last order block that was created. So an order block is the last bullish candle before a downtrend, or the last um, bearish candle before an uptrend, the last down candle before an uptrend, or the last up candle before a downtrend. Okay, so here we have this order block. We can see this was our order block, and I always use the body of the candlestick to mark out the range. I ignore the wicks. I have reasons for that. I will later on explain in a future video to come this week. So subscribe to this channel if you want to know why I use the candlestick bodies for targets or for marking out my order blocks. There's a huge reason, a beautiful one that you wouldn't want to miss for that. Okay, so let's remove these. Let's have a clean chart. So as we can see, we are in the 1 hour time frame, and we spotted an order block in the 1 hour time frame. And what we'll be now waiting for is for price to come back into that order block so that we can have an entry. As we can see here, we had a change in character, or a change of character right here when price broke this last higher low and created a new lower low, this one. Okay, so price took out this higher low and created a new lower low, and this we call it a change of character. The trend was moving in an uptrend, and then a higher low was broken, creating a new lower low, which means we are now expecting a series of lower highs and lower lows, lower highs and lower lows, which means we are looking for a downtrend. We want to catch a downtrend or the beginning of a downtrend. Okay, so this is our 1 hour order block. As you can see, it is very big. If we wanted to target this low as our take profit from this area here, from this order block, like this, and then target this low right here. And target this low right here, this one. You'd see that it would be a 1:2 risk reward ratio, which means if we risk $10, our targeted profit is $20. It's just a 1:2 risk to reward ratio. So the reason why we downscale to 30 minutes time frame, 15-minute time frame, or the 5-minute time frame is so that we have a smaller order block, which means our stop loss is going to be very small, something like that. Which now means if we risk $10, we are now going to get something like 110 US dollars, because this is a 1:11 risk to reward ratio. So the thing in forex trading is we should risk less and get more. Whatever we do, try as much as possible to risk less in order to get more. Forex trading is the only uh, market in the world where you can risk small, very small amounts of money to get a lot of money. Imagine risking $10 to get 100 US dollars. So we all need to downscale our order blocks. Okay, so let's put this back at its original place. Okay, it's here. Or let's remove it for now. So we want to focus on this order block. Okay, so having this 1 hour order block, let's switch to a lower time frame, something like 15-minute time frame, and let's go and see how we would enter at this order block. Okay, here we are. Such a beautiful trade. Okay, so this was our change in character, and then we are waiting for price to come back to this order block that was created here. Okay, so as I have always said, we need to have our entry at the midpoint of an order block. Okay, so for our entry, we'd take the half of this order block, like here. And then our stop loss is at the top of the order block, like that, something like that, slightly down. And then the last lower low that was created was this one right here. This was the last lower low that was created. So it would be our first take profit, and this would be our second take profit, followed by this as our take profit, followed by this as our take profit, followed by this as our take profit. So would scale down your take profits, or you switch to a higher time frame to go and look for a take profit level, which should be a significant zone where price can stop or start consolidating. Okay, so here we had this one as our stop loss, is our take profit level. Then the last take profit level should be somewhere here where price consolidated here. Okay, so we would want to have a long trade, since our order block was based on the 1 hour order block. So let's switch back to the M15 time frame. This is a 15-minute time frame. Okay, so here we notice that price came here into the order block, and it did tap on the midst of the order block on the halfway, and then it activated our trade, and then TP1 was hit, TP2 was hit, TP3 was hit. Okay, let's say TP4 was hit up to the point where we said this is our take profit. This one here, this level, this one was hit. Okay, so this was 1 to 18 risk reward ratio. 1:18 risk reward ratio, which means if you risked a single dollar, you would get 18 bucks on this trade. If you risked 10 US dollars, you would get 181 US dollars. If you risked 100 bucks, you'd get 1800 US dollars. Okay, so this is the trade setup, and this is how well it played. Let's switch into the 1 minute time frame to see if we would have more entries along the way, because usually you can have multiple entries. If you're trading it the right way, you can have more entries along the way. Let's see. I have problems with my network. It's not loading very fast, but if you would look into the inner structure, you would see that we would have multiple entry points along the trade. Okay, so this is our chart, the M15 time frame. Back to it. Okay, so we had this. Let's remove this one. Okay, we had this order block right here. Okay, this is an order block, and here we had some imbalance or fair value gaps, what they call FVG. Here, let me mark. We had this gap right here which needed to be filled. Okay, we had this gap again, needed to be filled. Right, and above all these gaps we have an order block, this one. Okay, this was the last green candle or the last bullish candle before a downtrend. Okay, this was a massive downtrend. Okay, we had this candle, so we would wait for price to tap our order block. Since there is no change in character up here, we would just take an entry at the body of the order block, not at the midpoint. I take entries on the midpoint only when there has been a change in character, and would get a nice trade here, a nice selling position with a stop loss just slightly above the order block. Okay, so we'd get our trade just like this. We can target the last low, which was a 1:7 risk reward ratio, and the trade is currently underway and is kind of reversing. So as for me, I would close this trade. Why? Because I've noticed that there's been a change in character in the opposite direction as well, which means someone has already taken this trade and is already in money. Okay, we see this was a downtrend, right? And then price broke the last low, and then here price broke the last high that was created right here. This high was broken, and then we had this lower low, and then this low high was broken, and we made a new higher high, a new higher low, a new higher high, and then we had this order block which was left here. Okay, this order block right here, we take the body. I'm trying to zoom and take the body. Okay, somewhere there. Okay, so price came and it just tapped on the body of the order block, and if you took an entry on the edge of the order block, be targeting these points, which is 1:6 risk to reward ratio. 1:6 risk to reward ratio. Risk your 10 bucks, you get you get 60. And then if you were waiting for my entry, which I advise entry at the midpoint of an order block, halfway the order block, you would get a 1:10 risk reward ratio. You risk 20, you get 200. You risk 10, you get $100. Okay, so I usually risk $5 or $10, and I only take a trade which has a risk to reward ratio which is more than 1:10. It's usually 1:7 to 1:10 going up. I had a trade when I took a trade which had a 1:20 risk reward ratio. I was trading v25 1s, and it gave me huge profits, man. I love that trade. I'll show you the results in the next video, which I'm going to make, which will be explaining why I take my entries on the midpoint of an order block. Okay, so this was just a video that I created for me to highlight some of the entry models that I use when taking trades. We can see that in just this period, we had about 3 successful trades which we could take. Okay, we could also have a trade right here, but there was no valid structure for us to say this is a change in character. Okay, you see we had this order block right here. This was an order block, and price came, it took out the previous lower high here. But for us to see we are now switching into an uptrend whilst we are just exiting another uptrend, it wouldn't make a lot of sense. It's not that much logical. So we ignored this break in structure, and then we just said we are taking out this high as our liquidity. Okay, so this was an order block, but we are not taking trades at this order block. We broke structure to the downside. We are now to the downside. We're expecting a downtrend, and then this is our liquidity. As we can see, even if we zoom here, we had imbalance. We had gaps to be filled. Okay, this was a gap to be filled. All right, and then that gap was partially filled, and when it was partially filled, we had an entry on the midpoint of that order block. This was also a gap that was filled. So never take an order block without gaps to be filled. As we can see here, let me show you, there was also a fair value gap to be filled right here just before the order block. You see, this was a very huge gap to be filled, and price came down and hit it hard, and it closed that gap. Also, we had this gap right here which had to be filled, and when price completed filling that gap, tapped the order block, now it's buying, it's in a buy position. Okay, so this is how I take my trades. This is how you can make a lot of money with v25 1s, which is a Deriv synthetic index. So if you don't have this account, the Deriv account, which can trade these synthetic indices, it's very easy trading these compared to those currencies which are affected by economic events and news and stuff. So I encourage you to start trading volatility indices with the Deriv platform on the MetaTrader 5 application, or in your phone or on your PC. Okay, so if you don't have an account, please I recommend you to click the link in the description and subscribe to this channel for guidance on how you can continuously make money in this market. Until we meet again, it's your guy Green Badge from New Forex Academy. Stay profitable, stay blessed. Goodbye.